Hi everyone, this is Jason Biarco of Wall Street from Main Street. I'm just going to do another short video today because there's been more stories that have come out. This one caught my eye the most. It was today. Central banks now own $25 trillion of financial assets. So it's talking about how everyone's debating whether or not Janet Yellen tomorrow at the Federal Reserve meeting, Jackson Hole is going to, which is a ski resort during the winter, and a nice summer retreat in Wyoming, I believe. Whether or not they're going to announce an interest rate increase or plans for an interest rate increase in September or November or December. Probably not in September, though, since that's the election. So either September or December. I think a lot of the Wall Street people expect an interest rate plan to increase interest rates. They're also talking about how, there's positive wage inflation here. You can read it in this article. I'll put a link to it. The positive wage inflation in consumer spending and a lot of retail and restaurant jobs, it's from politicians forcing the minimum wage higher. So they're saying that's good for the economy. Obviously, it's not. There's another note here about this article that Bank of America's analyst called it the liquidity supernova and the Keynesian put. That's actually pretty accurate. I'm surprised he actually called it the Keynesian put. But here's a summary of how crazy things are, how dystopian things are right now. There have been 667 interest rate cuts by global central banks since Lehman Brothers collapsed. G7 central bank governors Yellen, Kuroda, Draghi, Carney, and Poulos have been in their current posts for a collective 17 years, yet only one, Janet Yellen, has actually hiked interest rates during this time. Pretty insane, guys. Theater of the absurd, Twilight Zone stuff. Central banks own $25 trillion of financial assets, a sum larger than the GDP of the U.S. This is the annual GDP, not total assets in the country. Then the GDP of U.S. and Japan, and up to $12 trillion since Lehman Brothers. Obviously, this is probably on balance sheet. This is not counting any of the currency swaps, which are well over 20 trillion at this point, probably well over even 30 trillion. Jim Rickards is probably underestimating it in terms of that. We know that they're putting in right now over 180 billion per month just from the Bank of Japan and the European Central Bank, and that's not counting China or reinvestment from the Federal Reserve into interest payments. So there's currently over 12 trillion in negative yielding global bonds. That's approximately 28% of all total bonds. And then there's currently 8 trillion of negative yielding sovereign debt, 54% total. Just insane numbers, guys. When you look at these things in totality, I think, unfortunately, and it's not due to the fault of our own, a lot of people the people on Main Street, but the people on Wall Street, the politicians running the show, trying to preserve the status quo, these corrupt crony capitalists, and the central bankers, these Keynesian central bankers, mostly at large economies, they have put us in an economic minefield. So they have drugged us, they've roofied us with GHB or whatever, they've tied us up, gagged us, blindfolded us, kidnapped us, thrown us in the trunk, put a bag over our heads, driven us into a minefield, and left us there. That's how I feel when I read things like this. How are we going to get out of this? So another interesting Zero Hedge article. These are from last week. I heard about this. John Rubino of Dollar Collapse mentioned this. So thank you. Shout out to John. We'll try to have him back on the show soon to interview him. Global central banks are dumping a record $335 billion in U.S. debt in the past 12 months. Just an enormous number. Enormous number. So there's a lot of countries dumping. China, looks like Japan, Hong Kong, all dumping. And this is another follow-up article to that, too, after the one that came out last week. So why foreigners are dumping U.S. treasuries. John Rubino also talks, he has current event articles that he keeps track of. One of them is the Japanese government's basically nationalizing their stock market. Monetary policies nationalize the Japan stock market. CNBC actually put that. That's interesting. The CNBC actually said that. CNBC, once in a while, from the economic propaganda and that the economy is doing well, blah, blah, blah. CNBC will stick in a halfway accurate story here. This one is states face pension fund gap approaching $1 trillion. It's probably over $1 trillion. They're probably not counting the numbers. I'll attach the link to this so you guys can see it. Normally what they're going to do is what they've been doing with CalPERS and CalFERS, which are the two massive pension funds in California. Those guys have been lobbying Sacramento because they were supposed to get 8% returns per year for a while, and they've only been getting 1% or less returns since 2008. So there's a huge shortfall gap. So they've been lobbying the politicians in the state government in Sacramento, which is the capital of California, to try to raise taxes on California residents, with VAT taxes and, car tax, burrito tax, extra gas station tax, just layering taxes upon taxes upon taxes. But normally, with CNBC, there's just so much economic propaganda from both governments with all their economic data, and also propaganda from the mainstream media about so many different things. One of our listeners brought up why we don't boycott the mainstream media. Well, I hardly ever check stuff on the mainstream media for the most part, but a lot of Americans still do. Unfortunately, they get their news if they're a neocon and Republican, they check Fox, and if they're Democrats, it's Washington Post, New York Times, MSNBC, CNN, and things like that. So we for the rest of this short podcast, just want to mention a couple stories that I see, and then I'll let you guys go. But we are in an economic minefield. So I think that's a term that I guess I coined. I haven't heard anyone else use it. I've heard Doug Casey talk about the hurricane. I've heard other people mention good analogies with that. I think the best analogy that I've thought up about this is that we are in an economic minefield. There's just so many bubbles that could burst. One of our listeners also brought up that, there's basically a global plunge protection team now. So it's not just the plunge protection team or all the different versions of it here in the US. There's so many different countries now trying to protect their asset prices from falling. So I guess that would be a global Keynesian put or global plunge protection team. This is Charles Ortel sent me this. I guess he provided some of the research for this book. Jerome Corsi has a new book out called Partners in Crime about the Clintons. It's available on audiobook from Audible, fully unabridged. And there's a lot of interesting research in there about all the Clinton scandals for decades. So you have the books out that are Clinton Inc., you have Clinton Cash, you have the Clinton Cash documentary as well as the book. Now you have Partners in Crime. And there's going to be other stuff coming out too. And yet, the mainstream media won't really say anything bad about the Clinton Foundation. When I was at the gym yesterday watching CNN on mute, they were like, Trump just keeps bringing up this Clinton Foundation scandal and how Hillary just needs to, change the topic and she'll be fine. I was reading the subtitles or the closed captioning that they have on mute at the gym, just seeing how they dismissed all the Clinton Foundation stuff. It's not really a big deal. It's a huge deal, guys. Try to wake up your friends that are going to vote for Hillary. It's just unbelievable. Try to show them how much of a scam the Clinton Foundation is. It's really amazing how much money has been stolen. In a lot of cases with the AIDS medication, they pocketed all this money from governments, and then they didn't buy I don't think real medication. Like either it was really bad medication or they didn't buy it at all and they just put it in their pocket. So it's just amazing how messed up. But yeah, a lot of the mainstream media, guys, is talking relentlessly about the election. Obviously, I think the election is somewhat important, but, I think we're so far along, as you can see from some of the stories I already mentioned here. And John Rubino covers news stories, so he aggregates them for you. So you can go to Dollar Claps and check that out. I think that's a pretty useful tool for things. There's positive stuff with technology. There's some interesting technology stuff. Maybe I'll have a technology expert on, but everyone can't get a technology job. It's very highly skilled. They're very competitive. So there are some amazing things going on in technology right now. It looks like Apple's going to be releasing with a partnership like Energous company in the near future. They're going to be releasing wireless charging, so no wires needed. They're going to have these things hooked up so all electronic devices can be charged at a restaurant wirelessly within 10, 15, 20 feet in the next couple years. So, and there's amazing cancer research and for cancer cures and things like that. Obviously there's natural cancer cures, but there's breakthroughs in biotech as well. But we have controversies with the government blocking stuff with the EpiPen stuff. Did you guys see that? The funny thing, I saw a story on the Daily Caller about the EpiPen controversy. Is the executives at the company that's making all the money off the EpiPen, they're tied to Hillary Clinton and the Clinton Foundation. And Zero Hedge had a great story about this. It was from Mises, talking about there would be plenty of competition for from the free market for generic competition for the EpiPen, but the FDA, the Food and Drug Administration, is blocking the competition. And there's been a lot of cases. I was a biotech investor for a little before the 2008 crash, and then I started buying some more after the 2008 crash just for speculative purposes. But yeah, there's a lot of cases where there's obvious manipulation of the larger biotechnology companies, big pharma, using the FDA, and they have their own guys on the panel, or they bribe the scientists there, and they get the biotechnology stocks, hammered down. They say, this trial, it didn't go well, and now the biotechnology company is out of cash, and either they have to do a large partnership deal with the larger pharmaceutical company, and then the pharmaceutical company has an option on the drug to buy them out. And in the biotech company, at least they don't go bankrupt. But I've seen cases where the biotechnology company, the small one, they had a good drug, good patents, good IP, and here we were, the FDA blocked the furthering of studies of the drugs that could have actually helped people. And then, within a month or two of the trials getting blocked, the small little biotech is out of cash, can't raise any more money. And then the large pharmaceutical company comes in, who probably, did lobbying or other nefarious things to get the research blocked and advancement in the drug. Then they come in and buy out the company for pennies, literally like 1 or 2 cents a share sometimes, buying up a whole portfolio of patents and IP. So this is what happens with fascism and cartelization. It's not just the Federal Reserve that is cartelizing the economy. It's not just the banks and the Federal Reserve. There are cartels and large corporations and corruption and cronyism due to the army of bureaucrats in so many different countries. Army of lawyers, army of bureaucrats in Washington, D.C., at all the government agencies and in Brussels and things like that. So these guys are preventing the private sector from recovering. They're preventing high-paying full-time jobs with entrepreneurship and small business being able to make sound investments and create value added with new products and services. They're stalling that out. And there's just trillions upon trillions upon trillions of misallocated capital, guys. And unfortunately, it looks like we're going to have a global economic reset in the future. Can't give you an exact date on it, but this global economic reset, it's most likely going to be even more inflationary than the rest of them. And how do I know this, do you ask? How is it not going to be deflationary in fiat terms, in fiat currency terms? Well, let's go back through history and look at how inflationary the gold exchange standard was after World War I. Look how inflationary the Bretton Woods was. A lot of people won't talk about that. Henry Hazlitt, who's a champion of liberty, he was an amazing person. Read Economics in One Lesson if you have not read that book. It's one of my favorite books out there ever. It's just a really easy read. It's the best book you can buy for beginners for Austrian School Economics and get people logical framework. But yeah, I mean, it's just amazing. So Bretton Woods, guys, it was just even more inflation. So it was like, all currencies are pegged to the dollar and the dollar is pegged to gold, so there'll be assurances. Trust me, there was a lot of extra inflation layered upon that. So that's where we're going. The global elites, they want more control. They want to start issuing inflation upon inflation again, to devalue the debt, to devalue their debts. And I think, that's why these academics are writing papers, whether it's Japan or the US. Japan, they're talking about 50-year or 100-year bonds, moving debt and savings into their potential debt devaluation that way to inflate away the debt in real terms. The U.S., Ken Rogoff talked about the 50-year bond because of ultra low interest rates. The U.S. government should take advantage of it. Yeah, right, because they manipulated interest rates lower in the first place with financial repression, forcing savers to take enormous amounts of risk just to get any type of return on their cash. There's a lot of people who can't retire now, who are retired or can't retire because they can't find the yield they want without taking on a lot of risk. The jobs data is saying those people who are retired are going back looking for part-time jobs. In terms of other anecdotal evidence about the economy getting worse, a couple more things before I let you guys go. The other major things, I'm hearing this from D.C., Washington, D.C. metro area. One of my best friends is a good real estate agent at one of the largest firms in the area. What he is telling me is that a lot of people who graduated college and even have jobs, their parents are co-signing. He has to look at proof of income in order to rent places out to people. And these adult kids who graduated college with degrees and have jobs, either teachers or government employees or whatever other jobs, their parents are still paying their rent. In a lot of cases, they're either paying a large chunk of it or they're paying all of it. And it's something that's just not being talked about. I don't think the government statistics are covering any of this. The other thing I see, and this is from posters on Facebook in one of my Facebook groups for DC libertarians in the area. This is, only for social events for DC metro area for libertarians, is a lot of people in there are posting who have a house in the DC metro area. They are trying to rent out the basement. They are trying to rent out spare bedrooms. They are subdividing basements into a couple rooms where people can sleep for $800, $900, $1,000 a month. Things like this, guys, would not be happening if the economy was doing well. People would not be looking for creative and entrepreneurial ways like this to make ends meet if the economy is doing well. So these are signs. Normally, I read Dominic Frisby's book talking about how, in Cuba, because he visited Cuba and he's English and they didn't have the embargo like the U.S. did, and how a lot of people in Cuba, to get by, they had to rent out their houses as either a hotel, they had to rent out rooms or bedrooms, or to boarders, people there, tenants who wanted to work and wanted a cheap place to rent, and that's how they brought in extra income. So when the economy is doing well, as the government has tried to claim from 2009 to 2015, there's wage growth. Okay, it was revised back down again. So all that wage growth that the economy is doing well, all those GDP growth numbers were all revised back down almost to zero. All the wage growth that the government claims that happened during those years after the recovery, in air quotes, the wage growth was revised back down as well, almost to zero. So we are in a full economic propaganda economy, unfortunately, guys. Hopefully you enjoyed this video. Takeaway, though, if people ask you about the global economy, it's one giant fustercluck, or it's one large economic minefield. And unfortunately, I don't see us getting out of this without pain. The visual description of an economic minefield is just a scary one.